Anyway, we have Neeraj Seth, founder and CIO at 3R Investment Management with us. Neeraj, always a pleasure to be speaking with you. Thank you so much for joining in. So I'm not going to ask you whether you believe what the US president just said or not. Let's park that aside. But the more important question for us here in India, is there a real anti-AI trade that people are thinking of? And if yes, can we hope to be beneficiaries of it? Your thoughts?
So first of all, I don't think you need an anti-AI trade. I think you need a diversification trade.
Yes.
And that works in favor of India. Obviously, India missed out on a lot of the rally if you look at the last 12 months. And some of it is obviously the whole AI euphoria, and that has been going on. And with the NVIDIA results, basically, it just reinforced that trade is still there. But I think where India plays, in my view, is as we go into the year end and next year, is one, the GST cut. Obviously, it's playing through the system now. You see some cyclical recovery in the earning after the bottoming out. And I'm still keeping my fingers crossed on the trade deal. India is still waiting for, obviously, the trade deal, which will bring some impulse for the market rally. And from a diversification standpoint, when I look at the globe, I think India actually looks good going into next year.
Yeah, no, absolutely. India looks good from a diversification point of view. Neeraj, just a quick word on the December meeting from the Fed. We get the jobs data for September tonight. October will be bunched up with November whenever we get that. Most likely, I guess, in December. But what's your sense? Will we see another rate cut? Will we see a pause? I mean, I guess it's gotten much more divided now.
I think it's much more divided, and hence, to some extent, Chair Powell's word carries more weight, in my view. And he did give a preview in the last press conference around December not being a done deal. And you've seen the market repricing the December cut down to now less than 40% chance for a cut. If I look at, obviously, where things are, the financial conditions are still easy. The inflation is still sticky. And the data is, one, absent for a while, and you have some level of potential distortion because of the shutdown and reopening that's happening in the US. I think the December is not a done deal. I still think Fed has 2 to 3 cuts in the pocket over the next 12 months. But the chances are that the Fed pauses, waits in December, and waits till more data to go again in January. So I think that's a real possibility of no rate cut. And you've seen that playing through, obviously, the dollar rebound and to some extent the gold price moves in the last few weeks.
All right. Yeah, Neeraj, I was going to ask you on gold. What's going to happen to gold? You know, the call out there was that, in fact, gold's going to trend higher. And suddenly you have some kind of stiffening with regard to the dollar index, some uncertainty with regard to those rate cuts as well. And the dollar index has been looking a little bit skittish. However, central bank buying as well is something that's been pushing the gold prices up. Where do you see gold headed from here on?
So I remain positive. I don't think I'll change my view on the short-term moves. The positioning and the shift in terms of the Fed expectation did cause, obviously, some volatility in the gold price. And we've seen, obviously, in the last 3 discussions we had, every time we were close to 4,000, we cross, we come back, we cross and we come back, and we're still there. But it's still above 4,000. If you take a huge step back and think about the drivers between the central bank demand, the debasement of the currency risk that people are worried about, I don't think that the gold price is something which is in a secular decline here. It's correction. It's a healthy correction. In a 12 to 18-month view, I think gold still has meaningful upside from here. So I would keep gold as a hedge in the portfolios.
By the way, on the dollar, Neeraj, dollar is now it's above the 200-day moving average last night. It's taken that out, and we were talking about the Fed, right? What it'll do, and the October-November bunched up data we will get in December, but after the December FOMC. So in that sense, it's kind of it's flying blind, so as to speak, right, Neeraj?
So 2 things. First, on the Fed, I do think they still have access to a lot of data. Obviously, the job reports and some of the critical data is getting delayed because of the shutdown. And hence, I do think the risk of Fed pausing in December, because obviously they would like to see more data before they continue on the easing path. The second, from a dollar index standpoint, I do want to highlight there's one currency on the other side of this index, which is the Japanese yen, which has seen a meaningful move over the last few weeks since the elections. So it's not just the dollar strengthening against everything. Dollar obviously has seen strengthening, I would say, more in the third quarter than the fourth quarter. And if I take a step back again, think about the question around obviously the Fed cuts path forward, the point about the new Fed chair appointment that'll come in the next couple of months, the whole question around the Fed independence, the fiscal sustainability. I'm still in the camp that as we go into next year, we'll see potentially more dollar weakening rather than strengthening from here.
Got that. Neeraj, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18.